Hello everybody. In this video, I am going to give an update on my portfolio and show you all of my positions. Let's get started. Right now, my portfolio is worth $165,993.23. In the past year, I am up $1,147.80. Year to date, I am down $85,011.37. Today was a green day for me. I was up $9,180.25 during the day, and then after hours I'm up about $3,000. For my options, I am selling Amazon $195 covered calls. These expire March 27. My return, I am down $565. I'm selling Google $290 covered calls. These expire March 27. My return, $40. I'm selling Robinhood $100 covered calls. These expire March 27. My return, $133. I am selling Robinhood $70 puts. These expire March 27. My return, I am down $6. I'm selling SoFi $24 covered calls. These expire March 27. My return, I am down $106. I'm selling SoFi $16 puts. These expire March 27. My return, $7. For my stocks, I have 1,900 shares of Robinhood. Robinhood is at $78.94. My average cost, $116.75. My return, I am down $71,974.09. I have 400 shares of Google. Google is at $306.09. My average cost, $306.59. My return, I am down $198. I have 500 shares of Amazon. Amazon is at $208.02. My average cost, $206.91. My return, $557.50. I have 5,300 shares of SoFi. SoFi is at $18.90. My average cost, $5.77. My return, $69,502.75. This is a margin account. My buying power is $151,496.70. My margin buffer is 21.61%. My margin buffer indicates how close I am to a margin call. The higher your buffer percentage, the lower your risk of getting a margin call. So because I'm at 21% right now, I feel fine. But there was a scare during my last update about how I think I was only like 3% margin buffer. So I was pretty close to a margin call then. But now I'm at 21% because some of the covered calls I had expired and then shares got called away. So that's why I'm at 21% margin buffer now. So I'm in a better position in terms of margin buffer, thank goodness. As for how much margin I'm using, my margin used is $291,563.80. My annual rate is 4.80%. That's my interest rate for my margin. The daily interest that I am paying is $57.94, and I'm using $1,000 of margin interest free. So it's a new week and some positions got called away, and then I added a bunch of new positions as well. So let's talk about that. I believe one of them was Kroger. We got to talk about Kroger. I had the, I think $63 covered call I was selling. So yeah, the $63 covered call, and at expiration, it was $68.24 per share of Kroger. So because it was above $63 at expiration, my shares of Kroger got called away. So these are no longer in my portfolio. And then that freed up some buying power, which increased my margin buffer. Another one was, I believe, Google. Now, Google, I think I had the 310, and this was close. Very, very close. After hours, it dropped below that as well. Yeah, the 310 call assignments, price at expiration, $311.76. So super close to 310, but it was technically above that. So that's why my shares of Google got called away on Friday. So it was 311 at expiration, which is above 310. That's why my shares of Google got called away, and then that freed up some buying power. However, today I bought a bunch of shares of Google back. So I bought shares of Google, and then I sold covered calls against that. So that's why you see my new position now. As for my new position, I chose a strike price of $290 as opposed to $310 like it was before. So lower strike price now. We'll see what happens. Another one was Amazon. These also got called away. Amazon, I believe I had the $200 strike price, and it was above 200 at expiration. Yeah, so where was it? Yeah, the $200 call assignment, the price at expiration was 210. So 210 was above 200. That's why my shares of Amazon got called away. However, now today I bought more shares of Amazon, and then I sold covered calls against it. So this time I chose a strike price of $195. So slightly above 200 like it was before. We'll see how it goes. Shares of SoFi did not get called away, so I still have my shares of SoFi. It was... I chose a strike price of $27, I believe, and SoFi was well below $27 per share, so I kept my shares of SoFi. Robinhood, I chose a strike price of $105, and it was like at 70 something at expiration, so yeah, I kept my shares of Robinhood, and I think that's it. If I remember anything else, I'll let you guys know, but I think that should be it. So that's why my portfolio is what it is right now. Shares got called away. I kept some shares of the SoFi and Robinhood, and then I entered new positions for Amazon and Google today. So we'll see how it goes. And yes, I did choose strike prices below the current price because I'm trying to be careful about, you know, share prices going down even further than they have been. So I kind of chose lower strike prices because of that, just in case things keep on dipping. And oh, something else to note, I actually sold cash secured puts. So I usually don't do this, but I did sell puts this time. I sold puts for Robinhood, so $70 puts. I'm selling these. This basically means that at expiration, right, March 27, if Robinhood is below $70 per share, then I am obligated to buy shares of Robinhood at $70. So I will own shares of Robinhood if it goes below $70 per share at expiration. However, if Robinhood is above $70 per share at expiration, then I simply collect the money I get from selling these puts, and then that's it. I don't own the shares. I don't have to buy the shares of Robinhood. So we'll keep a close eye on this and see how it goes. But for now, Robinhood is above $70. So as it stands, and if it stays this way above $70, then I'll simply collect money for selling the puts, and then I don't have to own the shares. But if I do end up owning shares of Robinhood at below $70 per share, I will not be mad about that. SoFi also, I chose to sell the $16 put. So at expiration on the 27th, if SoFi is below $16 per share, then I'll have to buy shares of SoFi at $16. But if SoFi is above $16 per share at expiration, then I simply collect the money that I got for selling these puts, and then I don't have to buy any shares of SoFi. How much money? So for this one, market value is $322, so I've got $322 left to go. So I'll get an extra $322 if it stays above $16 per share at expiration, and then I won't have to keep the shares. And then for Robinhood, $226 left to go. So if it stays above $70 per share, I'll just get $226 for selling these puts, and then nothing else happens. I won't have to buy shares of Robinhood. But yeah, I'll keep on making more updates to let you guys know what's happening with my portfolio. It's been a rocky road recently, gone down quite a lot. And then I have green days like this where it goes up like more than $10,000 in a day. So there's some wild swings back and forth lately. I'll keep on making more updates to let you guys know, how things progress, if I get wild swings downwards, upwards, whatever it is. But for now, that's it for this portfolio update. All right, I hope you guys enjoyed watching this video. If you guys have any questions, comments, feel free to let me know down in the comments below. Thanks for watching. I'll see you guys next time. Bye.